Hi, everybody. This is Karen Hyland with eXp Realty. We're located in Central Maryland. My husband and I, Chris Hyland, sell real estate. And I'm here with Blair Warner, an old friend who is a credit counselor. And he's here to talk about some of the changes in credit scoring lately. So go ahead and introduce yourself, Blair, again.
Okay. Yeah. Well, as you said, gosh, time's flying. It's been almost 10 years that I have owned a credit repair company and debt consulting company. Was a mortgage banker before that for 4 years. So I've been around this stuff for a while. And one of the advantages of being in this business as long as I have is seeing all the changes that happen in not only the mortgage world and the real estate world, but also in even just the new FICO scores that come out and the new regulations that affect our industry. And so I'm excited to actually share some of that with you today and help.
Great.
So that it'll help, your potential.
Yeah.
Yeah.
Yeah, there have been a lot of changes, and I really like having someone like you available to us because as realtors, we're not always up on all of this latest stuff. So it's great to have these conversations now and then. So I have heard there's been a couple of changes since the summer. One with the CFPB with some of their standards, the Consumer Financial Protection Bureau, which is kind of a relatively new group, and then some other things about medical reporting and things like that. So why don't you jump in and tell us what's new?
Okay. Well, it kind of came to the public eye fairly quickly, but they've actually been something they've been working on for the last 2 or 3 years. And one of the things that the CFPB, like you said, and the CFPB, by the way, Consumer Financial Protection Bureau, is something that Obama put in right after the crash of '08, like within the first year or something after that. And they were given a pretty broad responsibility and broad power. And so the credit bureaus was on their list to deal with and to try to revamp. And they finally got to it just a couple years ago. And so they've been working on it. And one of the things that they're concerned about, and I'm not a big fan of the CFPB on all aspects, a little bit too much, got their hands a little bit too much in things and too much power. But one thing I do like that they have, the way they've approached credit reporting is their goal is to make sure that the information is correct so that banks and lenders, when they make those decisions, they're not declining people who should be approved and approving people that should be declined. And so their goal is to give the best picture to the lender as much as possible. And one of the things that they discovered in their research after a couple years of researching is that a lot of the tax liens and the judgments that were being reported, which is reported on your credit report under the public records section. And a lot of those judgments and tax liens were reported erroneously. They had partial information. Maybe they didn't have a correct Social Security number or address, or they didn't even have a name. Sometimes they just had the Social Security number, didn't even have a name. And so they were concerned that a lot of that was being reported erroneously and thus causing people's scores to be lower than, or higher, I guess, if there's the absence of it when it should be on there. But their scores would be higher or lower. It wouldn't be a true picture of their situation. And so they came up with some guidelines. They said, if you're going to report a judgment or a tax lien, it has got to follow these, have these particular criteria. And I don't remember all of them, but it's things like it's got to have Social Security number, name, the date that the judgment was, and then who the entity was that filed the judgment. All this has got to line up. If you got 3 out of the 4, nope, can't report it. You got to have all 4 of the information. And what they didn't realize was that by putting that requirement on there, like 80% of the judgments and tax liens across the nation just fell off of credit reports, which confirmed their research that stuff wasn't complete. And so I do like that they did that. Even though I don't like everything they've done, I like that they did that. And what that did is that probably about 30% of the people across the nation, 30-40% of the people across the nation saw their score go up because of that. Now, I want to make sure that we're painting the correct picture. it doesn't mean your score went up 100 points. I mean, they say that they did a kind of an analysis, and they just discovered that the average point increase was about 20 points that it caused by making this correction, because obviously that's not the only thing that comes into the picture of calculating a credit score, you know. So that's where that is, and that happened in July, Karen. So this being September, people should, if they looked at their credit report right now and they haven't looked at it in a year, they should see, they'll probably see some tax liens and judgments not being reported anymore. Yeah.
Okay. Good to know.
Yeah.
So then there was a second thing with the medical reporting.
Yeah. Yeah. I mean, medical has been something that's been discussed for decades, I think. You know, I mean, it's a big thing because a lot of people feel like that when you report medical collections, that since that was not a voluntary debt, like when you go get a mortgage, you signed it and that was voluntary, or when you got a credit card and you went out and you overused it and you maxed out, or you know, that was voluntary incurment of debt. But you know, medical's usually emergency, you go to the emergency room, or it's not something that you planned on. And so there's kind of some back and forth rhetoric about whether it's even fair or right to have that on people's credit reports. So to date, they still do report medical collections. But again, another good thing that I like what the CFPB did is they kind of came to a compromise and said, okay, well, what we're going to do is we're going to extend the period of time and make a requirement that before you can report any medical collection, it has to have be 180 days old. It has to be 6 months old. And if they're ever challenged on whether they ever tried to collect it or the validity of the debt, they have to be able to prove that they tried to collect it during that 6 months, which usually means they've sent some size certified letter that has, you know, shown that they're trying to collect and inform the consumer that they have this medical debt, you know. Now, do you remember what we talked about before about these medical collections and how they're such a ambiguous thing?
Yeah, I've had it happen to us, as a matter of fact. My mother used to work in a doctor's office where that was her job, was to you know, to bill people, to bill insurance companies. And when the insurance company wouldn't pay the full amount, maybe like you said, there'd be like $80 left over, then that would be charged to the patient, who sometimes never heard about it. That happened to us. My husband went to see someone about his wisdom teeth, and then we decided not to pull the teeth, and the insurance company was supposed to pay for it and never did. And it was probably a year later we started getting calls from a collection company, you know, where's our $180? We were like, we don't even know what you're talking about.
Right.
So yeah, we got that cleared up, but this is exactly the kind of thing that I believe it happens.
It happens all the time. I mean, when you go and if you have an emergency or you go to the hospital, you know, you get bills from the anesthesiologist and the surgeon and the hospital and the this and the that. And if the insurance company doesn't pay every single bill or something falls through the crack, they're still going to collect on it, you know. And what's been happening is exactly what you said. Either the patient never knows about it until it shows up on their credit report, or if it's a large amount, sometimes the patient may know about it before it shows up on the credit report, but it's $2,000 or something, and they just got out of the hospital and they already paid their deductible and they don't have $2,000, you know. So they decided that they have, like you said, they have to have 6 months before they can report it, and they have to prove that they tried to, you know, collect during that time. And
so it doesn't mean, oh, I don't have to pay that. It means you get a little time to work out a payment plan or to figure it out, and hopefully, you know, to get them to get to you with the right information, which doesn't always happen. But
no, and that's a good point that you brought out. If you're on a payment plan, they won't report you to the credit bureaus. Yeah. I don't care if you're only paying, you know, $10 a month, you know, if you're on a payment plan and you make your payments, then it's not considered in collection and therefore won't be reported. That's a good point, you know.
Yeah. And, you know, it's kind of I don't know if it's intentional. It kind of seems like it might be, but my mother was telling me that sometimes when you submit something to an insurance company and maybe they've changed the coding that they use for a certain service and they haven't let you know. So you're, as the biller, the biller from the doctor, you're submitting this in bill and you've got the wrong number and you don't know you've got the wrong number. So it comes back rejected. So there's all those even little clerical things that go wrong all the time.
Absolutely. Absolutely. It's just as ambiguous and messed up as our whole medical system in general is.
Yeah, unfortunately, I know. Now, and the other thing too that you mentioned about the first issue with the CFPB, there's a kind of a time limit on that too, right? Eventually, they're going to have all that worked out, and they're going to really, find people with the right information.
Correct. Yeah. Because just because they're not reporting it to the credit bureau doesn't mean you don't owe that judgment, you know. And if you go to buy a house, it may not show up on the credit report, but a good title company will have done their title search, and they'll see that judgment's there, and it's still going to have to be cleared before you can go to closing on a house. So you still owe the money. It's just not going to be reported to the credit report, which means that you're not going to have a false credit score. Your credit score is going to be more accurate, and hopefully higher. But the thing is that these people want their money. I mean, judgments, the courts, the whatever are doing these liens and judgments, they still want their money. And what they'll do is they'll eventually comply with the CFPB's regulations, and then they'll just go back and report it again. So I would say that you have maybe a year, to a window here that it won't be reported on the credit report. And even when it does finally all happen, it doesn't mean that everybody's going to do it, because some of the stuff is going to be old and they just won't want to mess with it. And so there'll be a certain percentage that'll stay off forever, but you don't know if that's one of your deals or not,
Right.
So, yeah. Let me give you give your listeners here a little background on medical, because a lot of people think that medical bills or medical collections, that, like, say, applying for a mortgage in your industry, in real estate, that a lot of people think that, mortgage companies don't care about medical bills. And so let me clarify on that, because you can't ignore them. You shouldn't ignore any debt that you have. Here's what it is. Mortgage people, underwriting in the mortgage companies, they will overlook the presence of medical. In other words, when they're going down and looking item by item on your credit report, they don't care so much that there's a medical collection that's there showing up. Okay, so they'll overlook the presence of it. But what happens is that FICO doesn't overlook it when it starts to calculate your score. So these collections are still going to affect your credit score. So in essence, you may have a low score because of these medical collections, and the mortgage company says, well, we don't care if you have medical, but you're not going to qualify at the credit score level for the mortgage, so you're still not going to get your mortgage. So you still need to take care of the medical in some way or another. And the best way to do that really is, if you came to me, I have kind of a 3-step process, but even advice that I can give people if they think they can do it themselves is you negotiate with them. So if you owe a $500 medical bill, you can negotiate with them and say, hey, we'll pay 50%. And if we do, will you delete it off the credit report and quit reporting it? So that's a simple thing, that if that's all that they have that's kind of keeping them from getting a mortgage, that's a simple thing they can do.
Okay. Yeah, I think I could negotiate for $500.
Yeah.
But if it was, if I had a catastrophic event, and there was thousands and thousands of dollars, I would definitely need help. So
yes, that's when it. And actually, another thing that happens is that somebody will have a pretty big medical issue, and like we just said earlier, you're going to get billed from the anesthesiologist, the surgeon, to this, to that, and all of a sudden you have all these different entities that are billing you. You have all the ones that fell through the cracks of insurance. I've seen people from one medical event have like 15 different medical collections on their credit report from 15 different entities. Maybe $82 for one of them. Another one may be $500, and one of them may be $17. But it's quite a bit to deal with, and I think for what my fee is, it saves a lot of headache to do it for you. And usually that's not the only thing that's on a credit report that's keeping somebody's score down. So that's what our services do, is that's part of it. The negotiating is part of the process. So
that's good. Well, good to know. I would let you negotiate for me any day, Blair.
Thank you.
So, all right, really good information. I'm so glad that we had this chance to talk, and I can pass this on to my readers. It'll be in my blog and on the website and here on the YouTube channel. So if anyone needs a little extra help with their credit score, Blair is certainly the one to call. So his number's down there right underneath you if you're watching, and I'll put it in the description at the bottom of the video. So
Well, and let me send me an email. Put my email in there too, so that people can send me an email if they and/or call.
all right.
And I was going to say something else. Oh, I do offer a free credit report evaluation. So if somebody wants me to look at their credit report and give my feedback and see what we need to do to optimize it to get the score go up and stuff, I'll do that free, credit report evaluation. And that helps a lot of people. Sometimes we do an evaluation and there's only one or two things, and to be honest with you, I'll just tell them in
Yeah.
5 minutes. In 5 minutes, I can just say, do this and this, and it's over with, and it's not worth it. But if you got 10 or 15 things and you need a 100-point increase, I think it's worth the time and this effort and my experience to be able to help out.
Sure. Well, it'll cut their time in a quarter, probably.
That's the other thing. Anybody can fix their own credit, okay? But they may take 2 or 3 years, and I can do it in 6 months. That's a good point.
Yeah. That's well worth it. I know we've sent clients Blair's way, and we're always they always have great things to say. So
thank you. I'm glad to help. So
yeah.
I wish you were down here in Texas so I can actually send you buyers and sellers, But
I know. Well, you get people moving to Maryland, give me a call.
There you go.
Oh, there might be some people moving out of Texas lately, unfortunately, but
Oh, really? Moving down to Texas?
Out of
out of Texas.
After the hurricane.
Yeah, after the hurricane. Yeah, that was terrible.
Yeah.
Then the one over in Florida,
Yeah. Yeah, it's gonna put a hurt on the real estate for a while, but
yeah,
people are resilient. Hopefully they'll find their way
yeah.
through.
Well, there's some things in some places in New Orleans though that never bounced back after Hurricane Katrina. So it does take a while.
Yeah. So
all
right. Thanks very much, Blair.
Hey, it's my pleasure. I enjoyed it.
All right. We'll talk to you again.
Bye.
Bye.